Heard some of the analysis there from our Middle East editor. The Americans saying they won't be rushed. The Iranians clearly not in any hurry, not a great deal of hurry anyway. What's the point of these deadlines that just keep being pushed back?
I guess we've reached a stage now that deadlines are less relevant, and what is very clear from the messages coming out of Iran and US and generally EU as well is that they are definitely trying to find a solution, and it's very evident now that the problems are not related to nuclear sanctions, but it's really something else, which is the arms embargo. So they're really out there trying to find a solution, and I think, as clearly indicated by both the parties, particularly US and Iran here, that they will not be rushed into a deal. And so as far as they get the outcome that they're looking for, they possibly will just go ahead and spend a few more days. And it's really doesn't matter if it's in 30 days or 60 days reviewing time in Congress if they get a good deal.
In the world that we live in, an arms embargo does not sound like a small matter. Is this something that will be overcome, though?
Yeah. Well, it's not a small matter, but of course we are seeing a lot of political pressure here, where obviously Iran clearly is being supported by Russia over here in this matter, and we saw that earlier this year Russia was ready to sell arms, particularly to Iran, even though the sanctions were still in place. So obviously this will be a big sticking point between the West and Iran and Russia on the other side of the negotiation table. But at the end of the day, the intentions are clear on both sides that they do want to lift the sanctions, and they will have to find a solution around the arms embargo as well. If they can find around a nuclear issue, I'm sure they will find a solution around the arms embargo as well.
So remind us what impact this will have on oil markets. How much oil will Iran bring back into global markets if it stops being excluded from them effectively, and tie that in with the other things we're seeing, because of course we have the US doing what they're doing in terms of fracking, we have the Saudis trying to retain their market share, we have the Indians and the Chinese trying to build their stockpiles. So how does that all build up into one big global oil picture?
Absolutely. You just said all the key strategic points around oil markets right now. US production, which is still rising, in fact, in the recent numbers as we have seen. I wouldn't say they're rising at the levels that we saw last year. It has the growth has declined significantly, but they're still producing a lot of oil. As far as Iran is concerned, their return is only going to add to the already unbalanced markets in terms of supply and demand. Supply is still exceeding demand, and any addition of Iranian oil on top of this is only going to make the markets further weak. Even if you take into consideration Chinese and Indian SPR, strategic petroleum bills, that we are expecting by end of this year, let's say last quarter, even taking that into consideration, Iranian oil returning to the markets will only keep the markets further weak and put further pressure by end of this year, particularly if Iran returns. If Iran doesn't return, of course, that's a different issue. But we are, as we see from what's going on, consider that Iran does return, even after 60-day review process in Congress, then you can expect some pressure, and that's what we are viewing as of now.
One of the hallmarks of the recent sell-off in oil prices was the way that, and one of the drivers perhaps, was the way that particularly Saudi Arabia, but other producers decided that protecting market share was more important than price, and that was one of the reasons we saw prices coming down. How successful has that strategy been? Because you see Saudi being knocked off the top spot, don't you, in a number of regions in terms of being the top supplier to maybe China or other places.
Actually, you're right. In terms of the market share, that's the strategy that they have been trying to hit. But last year, if you look at the total production out of OPEC compared to non-OPEC, their percentage was actually less, because the non-OPEC producers such as US added far more oil, taking away from that percentage share that OPEC would have otherwise given to the oil markets. So it really did not help them, but they are still keen on making sure that they don't lose, particularly Saudi Arabia, the market share that they lost in the 80s to the other OPEC members. And hence the whole idea behind investments in Middle East that we haven't seen declining, particularly UAE, Kuwait, and even Saudi Arabia are absolutely going ahead with increasing their production targets for this year and even next year, in order to maintain the market share in the new market, which is the Asian markets for them, and not the West anymore.
All of this points to a weaker oil price, does it, for you? Where do your forecasts sit within the range of other forecasts? I think I've heard 60 to 80 seem to be the numbers being talked about at the moment.
For the year 2015, we are still saying that it will average around $60–61 per barrel. By end of this year, if Iran returns, we will have to revise it down, particularly with Iran's return. We do believe pressure on oil markets. minutes. But taking a little bit longer term in the 2-year horizon, which is end of next year, we do see some support because demand is absolutely stunning if you look at the global oil demand as individually. But what has happened is, on one hand, even though demand is strong, supply is absolutely strong as well, and it's only improving. There's nothing stopping the supply from coming down. But by end of next year, the capex reductions would slowly start having impact on the global supply, particularly from non-OPEC, and that's when we start seeing support to oil prices somewhere between mid to end of next year.